Today we're taking a look at ASX listed stock Ardiden Limited. Their ticker on the ASX is ADV. We're going to be performing some technical analysis and making some predictions on where we can expect to see Ardiden go in the near future. Let's get into it. How's it going, guys? Ryan here and welcome back to another ASX stock analysis video. Today we're looking at Ardiden Limited. Their ticker on the ASX is ADV and they are a Canadian gold explorer which is obviously based though in Australia. At the moment their key project is based in Canada. It is called the Pickle Lake project and currently they have a JORC resource there of 110,000 ounces at 4.3 grams a ton of gold. So a really interesting resource there, and it is in one of the best gold districts in the world. Canada is known certainly for large gold mines, so be sure to go and check out this company if that does interest you at all. But today simply we're looking at their chart. We're going to be performing some technical analysis and making some price predictions on where we can expect to see ADV go in the near future. So without any further ado, let's jump straight into today's video. Welcome into the ADV chart, guys. As you can see, we're currently sitting at a value of 1.5 cents. Now, I would like to note though that the ASX did crash today. A lot of stocks are red. The vast majority are red. You'd be very lucky to have a green stock in your portfolio at the moment. So this big red candle, honestly, I don't think it really has much to do with ADV itself. And as you can see, based on the volume, there hasn't really been a sell-off or anything that has occurred. In fact, what we've seen is a lot of buying action, and on those green days, that is when the volume is coming in. Even just yesterday on the 24th of January, same thing, although the price didn't change, the volume was green. So overall, looking really good. One other thing I can see straight away is our 20-day moving average and our 50-day moving average. They both crossed the 200-day moving average. Not only that, our 20-day moving average has also crossed the 50-day moving average. So this is a real cluster of bullish signals from a moving average perspective, and this 20-day moving average is coming up very rapidly to act as a point of support for us. Now I'm just going to zoom out slightly so you can, I suppose, see exactly what is going on from a long-term perspective. As you can see, back all the way over here on the 26th of October, back in 2020, we had a high and the value of that day was 4.9 cents. So obviously this stock has unfortunately dipped quite significantly since that point, but it looks like we are now finally having a period where we are seeing a bit of a recovery. So overall, I suppose the downtrend from here has easily been broken, as you can see over there. So let's focus more on exactly what is going on right now as opposed to what has happened, a couple of years ago. So first and foremost, right now this point that we are sitting at is, in my opinion, a major point of support. As you can see over here, it was a point of resistance and a point of support and, a breakdown, unfortunately. So let's extend that one out. And as you can see, as we go along that line, this 1.5 cent mark is consistently hit. And you can see we tried to break out of this point as well back here in early November multiple times. And only today have we finally seen that over the past week, a breakout did occur. So that is really good. One thing to note though is we do have, of course, a gap. And this gap is sitting at, on the 14th of January, a day high of 1.3 cents to the following day, which had a low of 1.4 cents. So only a 0.1 cent gap. It may be a breakaway gap, but given the fact that the overall market at the moment is sort of tanking, wouldn't be surprised if we did see that potentially be touched at some point in time. But all in all, we've got a few factors going for us at the moment. We've got point of support here. And once again, I believe another point of support, if I can just copy and paste that line, just right where that gap actually starts from at the 1.4 cent mark. Only a cent away, but as you can see, lots of price action occurring. And that 20-day moving average will well and truly have moved up into range as we do come down potentially if this key point of support at 1.5 cents is broken. Right now though, I could suggest that potentially we are seeing a breakaway gap, and a bit of a cup and handle pattern could be forming at this point in time. I suppose though it remains to be seen, given the fact that we are obviously only just starting to creep up at this point in time, but that is a feasible option for us. From an overhead perspective, where is our key point of resistance? Well, our first key point of resistance is here at 1.7. As you can see in our recent run, this has been a major point, and all bar one of the days of our run, which was the day of 20th of January, have hit that point at some stage. 2 or 3 closes at least on that point as well, so very significant. It has also been tested in the past, as we can see over there again. So realistically, the target would be hopefully a breakaway gap, so we don't see this close, and a bounce off this 1.5 cent line and move back upwards. But let's quickly have a look at a few more indicators as well. First and foremost, MACD. Now the MACD has been performing very well for us. We had a nice cross back over here on the 23rd of December, which was the start of our uptrend and inevitably our breakout. So that has been going for a long period of time. We can see now, due to the fact that we have had this market dip, that the 12-day EMA has sharply started moving towards the 26-day EMA. Should this cross, I do expect we will see this gap filled. But if it does not cross and we see some, bullish momentum start coming in from a volume perspective, then I expect to see a bounce. So they're the two things you really want to be looking for to determine the direction of this stock in the short term. Now let's quickly have a look at the RSI. Given we've been on a run, I expect it would have been overbought, and as you can see, just fell into the overbought stage, peaking at 71.14. Now we're currently sitting at 53.78, so a healthy pullback obviously has occurred, and the stock's RSI has dropped. So we could, in theory, continue to move in an upwards direction. There is plenty of space for us to do so, but also there is plenty of space for us to continue moving down towards that gap. All in all, what am I expecting? Well, if we see another big red day on the ASX, then I do expect to see this gap right here closed, and that means basically hitting a value over here of 1.3 cents. If the ASX, for whatever reason, rebounds real hard and fast tomorrow, then I expect we will see a bounce off this 1.5 cent mark back up towards our 1.7 cent mark. The target obviously for me is going to be 1.7 cents. We want to be positive here, but don't be shocked if we do see this gap close at some stage. That wraps up today's analysis of ADV today, guys. I'd love to hear your thoughts down in the comments section below. Of course, if you did enjoy today's analysis, make sure you do leave a thumbs up. And if you want to see more of this sort of content, hit subscribe and turn on those bell notifications. I'll leave it there for today, guys. I hope you have an awesome day. I'll see you next time. Cheers.